Dale Cusick of Money Block joins me now, and he's off to a fresh start on this Monday. Good to have you here, Joe.
Thank you, Angie.
All right, so we have a lot of earnings coming into the market this week, including Starbucks. Full disclosure, you have a position on.
I do.
We have to say that?
Yes, we do.
For reasons that everybody knows.
Correct.
About. Okay, so let's move on to what are you doing with Starbucks?
Well, Starbucks, I'm looking for some upside. I have been for the last about 3 weeks. I've been in a lot of consumer names. I think that the consumer discretionary space is one that does have some upside potential, so we've been positioning there in the last couple of weeks with the volatility in the market. With Starbucks, I'm anticipating it's getting above that $60 level, not that much above it, especially going into March expiration. So that's how we're looking at positioning right now into the earnings.
So full disclosure, that's what Joe wants to happen.
Yes.
Okay, Joe, what do you think about some other stocks coming into the market this week as well with earnings?
Well, I think everyone's going to be watching Google. And the thing about Google is that it is one of the FANGs. You know, everyone comes up with these cool acronyms. I think right now with Google, it's going to be mixed. You're not seeing a definitive upside or downside, but obviously you saw with the action that we saw last week with Amazon reporting, another one of the FANGs. There were a lot of players, a lot of retail players anticipating further upside. They came out, earnings were good, but that stock just got whacked, and it's been very volatile. So we're going to watch Google very closely this week to see. I do not have a position in there.
Okay, Joe, what's your overall feeling about the market going into this week as well? Because as you know, last week was pretty wicked to investors, but we had some nice rally action that happened on that Bank of Japan move. So what do you think?
I am definitely not a buyer of the market. The reason why I say that is that you're seeing transports underperforming utilities. You're seeing that the Russell is leading the way down and underperforming the S&Ps. You're seeing these dynamics where there is a flight from risk into safety. The last thing that I've seen is the 10-year yields. Right, they've been challenged. You see the bond prices go up and yields going down. That is not a positive sign for the market. And so with that being said, I find it harder and harder to be buying a lot of stocks. There are a lot of opportunities out there.
Individual stock picks,
but I would say measure your size. As a matter of fact, my size, like on the Starbucks play that we did, I scaled it back. I did half of what I normally would do. Because of this market volatility, and more importantly, because of the uncertainty that's out there, and yes, the Bank of Japan and their stimulus,
right.
It's what I've learned over the years of trading is that when you have these types of environments, pull it back. Doesn't mean you don't participate, but pull back your size. That will save you from a lot of pain.
Good to have you here.
Thank you.